There's no way you can train the average user to look at a phishing email.
In the last 2 years, 3 years, they've gotten amazingly better.
Yeah.
If you've paid ransomware once, you're going to get hit again and be forced to pay again. We're here with another interesting conversation, and today we've got Jay Leek with SYN Ventures.
I started off as a practitioner, in the late 90s. I worked for Checkpoint for a short period of time. I spent a decade at Nokia. I ran core protective security. The last 4 years I was there for Nokia, and went on to be the international security officer at Equifax, and I was the first CISO in private equity. And ransomware wasn't even in a top 10 list. It was bubbling up to something that we were monitoring.
There's more than one of these very, very large ransomware.
I think there's a lot more of this going on than what...
And that's what we're seeing, right? A lot of it's underreported, because people didn't have to.
Like the technology attacking you, and if technology doesn't defend you, you're screwed. Adversaries are using technology to attack you, and so you have to respond at technology speed, not at people speed. Humans can't respond fast enough also, and that's a talent gap. It's a talent gap that needs to get augmented with technology, basically. They're never going to be able to prevent ransomware from being paid if human lives are at stake.
Hi, I'm Ben Carr, and we're here with another interesting conversation. And today we've got Jay Leek with SYN Ventures. Jay, we've known each other for a long time. Glad to have you on the show, though.
Thanks for having me.
Yeah.
Surprised after all these years, you still want to have me.
Well, look, we have a long history, but it's normally very positive. So
yeah, it was just in your wedding. Come on.
That is true. That is true. We go back, been about
24 years.
Yeah, pretty crazy.
We're going 25.
Worked together at a couple different companies, and now you're here at SYN Ventures. So why don't you, for those who aren't familiar with SYN Ventures, why don't you give a little bit of background about maybe your background and then SYN and what you're doing?
Yeah. So, like you, I started off as a practitioner, in the late 90s. I worked for Checkpoint for a short period of time. I spent a decade at Nokia. I ran core protective security. The last 4 years I was there for Nokia, and went on to be the international security officer at Equifax, and I was the first CISO in private equity, where I was a CISO at Blackstone. Led the early stage cybersecurity investing for them, in addition to being the CISO. And then in 2017, started my first venture fund, and 21 started my next one called SYN Ventures. And today we're investing out of two different strategies. We have a $300 million flagship fund is what we call it. It's a Series A focused fund predominantly, kind of A- to A+, pre-revenue to a few $100,000 million of ARR kind of focus. And then we have a dedicated cyber C fund. It's $100 million too. So it's exactly what you would think. It's two guys, two people, whatever, in a virtual physical garage somewhere in the world with an idea, so nothing's too early for us, but we're Series C, Series A focused. What's different about SYN from every other venture fund out there that we're aware of that focuses on security, or even the generalists, is that 100% of all my partners are either former Fortune 500 CISOs or former CEOs, CTOs, or founders of multi-billion-dollar security companies turned investors. So we're 350 years of operating experience running something of significant size, turned investors, basically. So that brings us a little bit different kind of value add to our investment thesis, and complements a lot of the more traditional kind of value add that other firms bring to the table.
Yeah, so you looked at a lot of companies, right? I think, I don't know what the number is for last year that you looked at.
Yeah, we'll meet 450 to 500 companies that we never met before this year, just like we did for the last 5 years in a row.
So what's the thing that you find interesting when you meet with somebody? Like, what are the things that you say, yeah, this is something I really want to dig into further? What are the areas of security that you're interested in? And then what are the things where you're like, yeah, this is really hard to kind of see how this fits?
Yeah. So look, the stage in which we invest, we're looking for, and I make this joke, and apologies to other people, this isn't funny anymore, but it really sounds like a Silicon Valley episode, actually, where we invest into 3 T's, but it's true. It's team, TAM, total addressable market, and technology, right? Those are the 3 T's of investing. And for the stage at which we're investing, the number one is team by far. Okay. I could not tell you if TAM or tech are 2 or 3. It's interchangeable basically, but they're not interchangeable with number one, right? The TAM has to be there, and you can't create a TAM. Customers want to buy it or they don't want to buy it. That's pretty simple. So that just to check the box. But on the team side, a team can hit a brick wall, it can run into a problem, do whatever, and it figures out how to drill through it, jump over, crawl under it, break it down, run around it, whatever. If they're a good team. If they're not a good team, they hit a brick wall, they burn venture dollars, that's really, really bad, right? So I'd say we're always spending a lot of time evaluating the team. Can the team build great tech? If they built some tech, is the tech good that they built? Are they coachable? Are they advisable? Can we work with them? Because we joke, but we're dead serious. The least valuable thing that we'll ever do is wire you money.
Yeah.
And if we don't check that box, 100% of all of our investments, we fail, basically. And so in order to be able to do that, you have to be able to work with a partner, though, and a founding team and everything that actually wants help, and that's part of why we have, I have so many different partners with different backgrounds, so we don't cookie cutter it. We can bring in the right help and what you need to augment, whatever that founding team or whatever the organization is. So I'd say that's number one. I think, though, where you were really more interested in going is maybe a level deeper into how we think about making investments and what gets us excited.
Yeah.
So arguably since 2017, we've raised just a little over $1 billion around one investment thesis. There's one investment thesis, has all kinds of fingers that come out of it. They get a little bit more detailed, but our investor deck from 2017 or investor deck from our seed fund last year, the first bullet on it hasn't changed. It's word for word. Quite frankly, the next 4 bullets haven't changed on it. Word for word. The interpretation has changed, though, but it's all around the people problem. So it's the talent gap, whatever you want to call it. It's the hundreds of thousands of unfilled jobs going to millions, whatever. And what changed from 2017 to, let's say, 21 when we started SYN, or even, continue here in 23, is it's not just the fact that there's a talent gap, and
Is that real?
hold on, it is real, because you got to find the right person that's willing to leave their job that you can afford, that's a cultural fit, that has a skill set you need in a geographic location you're looking for, right? And then you got to be able to retain that person, because Facebook comes along and offers them 2 times their salary.
Yeah.
Right. So it is real. Some organizations face it more significantly than others, but it's definitely real. But that's like the 2017 problem I just described. All right. The 2024 problem, or it's been going for a longer period of time than that, actually is that adversaries are using technology to attack you.
Yeah.
And so you have to respond at technology speed, not at people speed. So forget the 270-day dwell time, And I know this is like a Halcyon thing, but the example I always give to all my investors that they can relate to is like ransomware is the simplest example.
Yeah, it really is.
Like of technology attacking you, and if technology doesn't defend you, you're screwed. And there's tons of other examples besides that, but that's the one that my mom understands even, right? And so, so that's really, the talent gap now has morphed from the unfilled jobs and whatever to, humans can't respond fast enough also. That's a talent gap, right? So it's a technology gap that needs to get augmented with technology, or it's a talent gap that needs to get augmented with technology, basically, right? So that's number one. So if you start thinking about then the talent issue, the people issue, right? Then that has several other implications of fingers that come out of it. So if I do detection and response, by definition, I need a human to look at it. Maybe today you can argue some kind of bot's looking at it. You're still getting a human to look at it, though, right? Ultimately, even if they're doing some kind of filtering, right? So that means we need to have a prevention first way of thinking about things, right? So if you look across our portfolio, the overwhelming majority of our portfolio is very prevention first. If I can't prevent it, I do detection and response on failback for operational controls. Obviously, we have other things outside of operational controls, right? Secondly, automation, right? That's obvious, right? That helps with the talent gap or whatever. It helps with the speed of execution and all this kind of stuff. But most people think about automation as like SOAR. No, that's an example. So it's automation outside the SOC, different types of automation inside the SOC. AI starts playing very, very heavily into this automation theme that didn't exist 3 years ago, that exists today as well. So a lot of our themes, while they're the exact same bullet for bullet wording, the interpretations, again, have changed over the years, right? But the overarching theme is still identical, right? Then we have this very strong position around what we call a mini platform. So if you think 6,000 security companies in the world today, that's like daunting. Like, how do I get my head around 6,000 security companies? Well, I'm a simple-minded person, and I break it down into simple-minded ways of thinking about it. And we bucket 6,000 companies into 4 different buckets: product feature, point solution, mini platform, mega platform.
Okay.
Right? On the product feature side of the house, we'll argue that 80 to 85% of all companies in the world, security companies in the world today, are actually features.
Just features.
Yeah. And I'm not knocking on Israel. It's just kind of a fact of historically, more like 90 to 95% in features, right? Now, you can make money investing in features, particularly at a seed stage, and it can solve a very unique problem. And, but the issue is like they can get customers, early adopter customers, they can get some level of revenue, but whenever they'll eventually hit a brick wall, because
it's not what the enterprise CISO is looking for.
Exactly. Because what happens ultimately and how you delineate between a feature and a point solution is I have 100 unique vendors in my environment today. Am I willing to bring the 101st in to solve this problem, right? And what can really confuse investors, it can confuse the buyer, confuse the founders, all this kind of stuff, is the CISO goes, no, I'm not willing to bring a 101st vendor in to solve this problem. However, when CrowdStrike offers this to me, I'll pay them $500,000 a year. Like a feature, they can pay a lot for a feature, right? But you're not crossing the bar to manage another vendor to bring into your environment, right?
Yeah, it's the operational challenge that the CISO faces, right? Like, how do I manage this? What do I have to hire for additional staff? How do I bring this into my environment and actually consume it versus it being shelfware, right? It's a challenge we all face.
Right. And those features get confused too because usually they're responding to an incident, you're responding to an audit finding, someone told you how to do something, or you're over-rotating on something that happened to you, right? Sure. And absent that someone telling you to go do it, or this over-rotation because of an external event or whatever, you're not even contemplating this, right? So point solution, arguably we can say point solution can grow a very large company. Mm-hmm. Someone of the Halcyon team came from Silence, and I was an early investor in Silence. We grew Silence from 0 to 100 million in GAAP revenue, doing one thing and one thing really, really well. We were a point solution. By the time we sold to BlackBerry, we were a mini platform, right? I'll skip over that for 1 second. The mega platforms, if it's not obvious, are the Palo Altos, Microsofts, CrowdStrikes, whatever of the world that are in theory the acquirers of everything below, right?
Sure.
So the mini platform is the holy grail for venture and growth investing, though, for us, where all of our companies either out of the gate or have a roadmap over time, assuming they don't have an early exit, to become a mini platform. And we describe a mini platform as a growth-backed or venture-backed company that solves 3 to 5 unique problems that often represent 3 to 5 unique vendors on your roadmap or in your program today that you can consolidate into one platform. And so everyone's talking about consolidation. And while consolidation is happening with the big guys, more consolidation is happening at scale in the mini platform area. And the reason why we say 3 to 5 unique problems, it's not, we have companies that do more than 3 to 5, actually, even in our portfolio today. But generally speaking, there's not enough growth-backed or venture-backed dollars to put into an early-stage startup where the incumbent mega platforms don't start coming down on them as good enough, right? Because they get too diluted because they're fighting too many battles. Or the feature or the point solutions coming up on them saying we do it so much better. And you just get so diluted, basically, because you can only do so much as a venture-backed or growth-backed company.
Yeah. It kind of gets into more of the public space when you
exactly.
that range. So on the mega platform, I'm just interested because you brought it up, and look, there's been a lot of ground littered with people who wanted to become these mega platforms. Personally for me, I think of like Network Associates, right? McAfee Network General, and they bought a help desk, and they bought PGP.
Yep.
But they're not the only instance of that. It seems to me that space is really, really hard, right? Like even when I think of like a Palo or a Microsoft, sometimes they have a hard time playing because they're so large that it's hard to focus on what the real problem is, and it becomes challenging. What are your thoughts around kind of that mega platform space? Like, is it something long term that a mini platform should aspire to, or is it like, look, don't try to focus on that. Focus on what you're really good at and do it really, really well.
Look, let's just talk about some statistics first, and then we'll get to your more specific question. In the last decade, 60% of security companies sold for less than $100 million. Mm-hmm. There's plenty of zeros there.
Yeah.
Only 20% sold for over $200 million, or $300 million, sorry. In the last 5 years, I'm blending some data sets, but only 8% of security companies sold for more than $500 million. There was at one point in time in the economic kind of hype cycle or whatever that we came out of, something like 3 dozen security companies. Today, there's less than 2 dozen publicly traded security companies, Today, there's less than 2 dozen publicly traded security companies, right? So the likelihood of you going public as a startup is extremely low. Right. So, however, we need these mega platforms actually because there is levels of consolidation that make sense. As a venture guy, they're the buyers.
Yeah.
Like companies, unless we have a public company. And we've tried to take 3 companies public since I started investing in 2012, and we've done it successfully one time. We tried to take Optiv public and we sold it. We tried to take Silence public and we sold it, and we took Carbon Black public just for VMware to take it private. So that's been my career actually of that public company attempts.
That's really interesting because I think a lot of startups like that's that's where their eye is for a lot of people. Maybe not necessarily the people in the know, but a lot of employees in the company think, hey, maybe there's an exit here of going public, right? But that's really rarefied air to get.
It is, and sometimes it's not necessarily like the funnest thing in the world. Yeah, exactly. And then sometimes companies get $23 billion offers and decide to go public instead too. So I don't know. Let's see how it plays out. I hope it plays out well, for them. That's so there's crazy things like that even happen. But
and I heard somebody, I don't remember the specifics of the numbers we were talking about, but they said it was actually interesting that if you think about like where you exit, like some people pass up earlier exits that can be more lucrative and let them move on to the next thing to be again more lucrative. And they just hold on too long, and then the eventual exit they have isn't what they're really expecting.
So I won't name the company name, but there's a CEO in one of my portfolios. His first company, he had an offer for $350 million to get bought by this strategic, and they decided to go build a bigger company. And 5 years later, they raised money from some VCs and stuff to around $100 million. And 5 years later, they sold it for over $700 million to a mega platform type company, right? And it's funny, he'll tell you the story. He'll be like, Jay, I made the exact same amount of money at $700 million as I would have made it $350 million. It just took me 5 more years before I got it. Yeah. I got a 5-year MBA on building a business.
That's crazy.
Really so the bigger number's not always better, right? But you never know. It could have turned into $1 billion exit as opposed to 700. At the time though, this was the largest acquisition this, tier one acquirer ever done though too. So you just start looking at like exits in cyber. I mean, Palo Alto's largest acquisition is $800 million to date, right? Their second largest is 550 or 560, then 550, and then 440. We sold them 2, 3, and 4. And then there's another one for 410, and after that, it's all below 300 million.
Wow. Yeah, that's really interesting data.
Yeah.
So when you're looking at companies and they're coming in and you're having these conversations, like, do you get to the point where you're like, another endpoint product, I'm just not, this is tiring, like, this isn't going to work?
Look, so I was a seed investor in Carbon Black and the pre-product B round investor in Silence. And I swore I'd never do another endpoint product again. And somehow another Mr. Miller got me to do Halcyon with you guys. But fun fact, after John and Ryan came up with the idea of Halcyon and taking a lot of work that they were doing in their prior company, Bold End, and repurposing it from offensive to defensive capabilities, John called me up and said, I got this great idea. We're going to stop ransomware. I was like, all right, well, that's great. How are you going to do it? We're going to build an endpoint agent. And I was like, there's no way in the world that anybody's going to deploy an endpoint agent to stop ransomware. And this was, spring of 22, so a while back. And long story short, I went on this mission over a 2 or 3 month period of time that spring to prove John I was right and he was wrong, and quite the opposite. I talked to 40 CISOs and small, medium, and very large organizations. They all said, if you can tell me about the ransomware, I will never deploy another. If you can prevent it and also provide some recovery capabilities, I will 100% do it. And so here we are again, next endpoint agent. This is the last one I'm doing though.
Never say never.
I know, never say never. Yeah. I did do SOAR 3 times, so.
So look, why did ransomware intrigue you? Why did you think this was, after you talked to these guys, what about the problem seemed like, yeah, this was a big enough issue to solve? Look,
I mean, so let's go back to my Blackstone days. So, in 2012, when we risk rated what's the highest impact problem that we could face at Blackstone, we were at that point in time worried about destructive malware. The likelihood of destructive malware hitting Blackstone was almost zero, okay? The impact to it was the most significant, right? And we weren't really as worried about it hitting us. We were worried about it hitting our suppliers like the electric grid or other types of financial services related companies that we depend on and things of that nature.
Yeah, you're critical infrastructure.
Exactly. So fast forward, and ransomware wasn't even in a top 10 list. Mm-hmm. I left Blackstone at the end of 16, wasn't even a top 10 list at that point in time. It was bubbling up to something that we were monitoring. We weren't really that worried about it at scale. All right. Okay. But we were starting, the other thing about destructive that really made us concerned is that the adversary would get in, launch a bomb, and didn't have to get anything out. right? And so you got to get it right on the way in, right? Maybe there's some enumeration and things like that you can have in this dwell time or whatever, but like you really got to, you can't detect the lateral movement and the exfil and, eventually get it right before it creates harm. The harm's done, right?
Yeah.
And so when we look at ransomware, it's the same problem set, just applied in a different way, with actually a way of getting money out that's out of band.
Yeah,
right?
the motivation is there. It's
Exactly.
monetary. Yeah.
And so I look at this and I'm like, wow, okay, that destructive was like the most impactful thing that could happen to the firm, but the least likely to. That's the same dim result with the highest likelihood of happening. And it's like, this is a big problem. I have a CISO friend of mine, won't be named, but he was brought into a very large company after they paid a $75 million ransom that has been publicly disclosed to go and solve this problem. So he never paid a $75 million ransom ever again.
Yeah.
I mean, that's a big number.
Yeah, really big.
Really big number.
Yeah, I think hasn't been announced who it is yet, but it's been announced as like Fortune 50 largest ransomware paid to date.
Yeah, well, this thing that I saw something about Zscaler pushing it out or whatever. This happened like 2 years ago, so this is a different one.
Interesting. So you so okay.
I mean, a year and a half ago.
Yeah.
Unless this is all just kind of coming out really, really late.
Yeah.
Like he's been there for a while, and he came in after they paid the ransom.
Wow. Okay.
Yeah.
So you've heard some news there, right? Like there's more than one of these very, very large ransomware things.
I think there's a lot more of this going on than what people.
And that's what we're seeing, right? A lot of it's underreported, because people didn't have to. Now maybe the SEC guidance that's come out is going to change this, and we're going to see more of it. I think the numbers are going to go up. I think it only helps out if people are more transparent about what's actually going on, so we actually see what the scope of the problem is. Because I think that's part of the bigger thing is we hear about these things as these independent events, Change Healthcare, right? The thing that happened with the automotive issue, right, recently with the dealers. But we're not hearing about this consistency and the level of the problem in its entirety, so we don't understand how really big the problem is.
Yeah, I mean, but it's just too lucrative of a business to not go away,
Okay, so let's dive into the lucrative nature of it, right? So we've seen recently potential for the UK to get involved and potentially prevent, the payments of ransom. There's been talk in the US about that. Jen Easterly has come out and said that it's probably likely not to happen. But then we've also seen, recent potential for a Senate bill being advanced to categorize as terrorism. So where do you think the future for this lies?
Look, they're never going to be able to prevent ransomware from being paid if human lives are at stake, in my personal opinion. Like you're going to tell a hospital that people are just going to die because you can't pay the ransom if that's your only option because you haven't thought about preventative preventions up front. I just don't think that's possible. If something happened to critical infrastructure, we're going to do it to the detriment of our economy. I mean, I'm not suggesting like go pay the ransom. I think you should get ahead of the problem, and make sure that you don't find yourself in that situation. Or if you do, you've thought about how you can recover quickly without having to do it. That's the message that I would send to everybody. But not everybody gets that message. Not everybody thinks that way. Not everybody even knows it's possible to do those things. And so if you do find yourself in a situation, if human lives are at stake and if it's massive economic impact or whatever, you got to do what you got. If you're going to go out of business, like I think I was talking to John about one of the companies that you guys helped save that wasn't a customer,
I think that's a really interesting part of the holistic solution, right?
Exactly, and they weren't a customer. FBI or whoever referred them to Halcyon, and Booz Allen was deployed through their insurance company and said it's going to take 6 weeks to get you up and running, and the CEO was like, I got two weeks of working capital. I'm out of business in 6 weeks. Don't even bother. And you guys were able to save them, obviously. But yeah, no. I mean, like, what do you do in that situation? You if you didn't know to call us, that guy's paying the ransom. Otherwise, he's just going out of business.
Yeah. So a solution like Halcyon, right? We do prevention. We do the key capture, right? We've had 100% efficacy on the actual prevention side, but in case that ever fails, key capture, and then we announced DXP, right, to prevent the exfiltration of data. Because I think that's one of the most underrated problems with the ransomware side is, sure, you have to get the keys back and get back to operational status, but you've still got this reporting and regulatory issue of the data that was exposed. But even if you've been hit and you didn't have Halcyon there to prevent it, the ability to come in and do reverse engineering on it and actually get that data back. I mean, whatever you can do, because the statistics are that if you paid ransomware once, you're going to get hit again and be forced to pay again, right? Yeah. And we've seen stuff like Change, where they made a payment, but then no honor among thieves. That payment didn't make it to all the affiliated groups, and so they are still under ransom, and that data still hasn't been returned or deleted, right? I mean, It's a huge problem.
Well, look, you just nailed two different business problems, all right?
Yeah.
So you got the ransomware actors that are, encrypting your environment, and that's impeding operations. And so that's a business resiliency, operational issue, operational impact, one thing. On the data exfil, this is extortion. It's a completely different business problem. While it has the regulatory impact, that you're referring to, it has a reputational impact that could be much more damaging.
Yeah, and the extortion isn't just for that company too, right? I've seen instances where it's not been the company, but then they go after your vendors, your customers, anybody who they have that data for. It's double, triple, end-level extortion, and as much as they can get.
This is the reason why it's a massively lucrative business. So a couple years ago, we have our investor meeting like once a year. So this was in 22, maybe 20. This is 23, I guess. It was in 23. We invited Ryan and John to come do our closing keynote for our investors, and they started off and said, "How would you like to invest in this business?" And I forgot which ransomware group it was, but they said, "Yeah, X amount of growth, X amount of profitability, all this guys." And they literally had I won't name, but like some of my tier one investors, like big endowment LPs. They're like, "I want to invest." They thought he was serious. Like, "I want to invest. I want to invest." It was like, "Well, this is Russian."
Yeah.
They're like, "Oh man, it was too good to be true," and it was. But it's like the most profitable business on the planet.
Well, that's the problem. I mean, if you had the opportunity to, and you didn't have another way to make that type of money, and you're not a very ethical individual or group, yet that's what you're going to do.
And you're not going to go to jail in certain jurisdictions. Probably paying off the right people.
So where do you come off on the potential for this to be elevated to like a terrorism category, or it's something else, something equivalent to terrorism?
I think that it depends where they go. If we had a situation where they took out the grid for the East Coast for some extended period of time, something like that, I think that's going to be maybe more like an act of war kind of thing.
Yeah.
I think if they continue to target,
so how close do you think it got with
Change?
using that? Well, I'm thinking Colonial and Change, right? Those are the two that are that were pretty impactful as far as like a real critical infrastructure standpoint.
Yeah. I think that they're walking a fine line. I obviously will never know. Something tells me they didn't expect probably a significant of an impact.
As large as it was.
Something just tells me that, But since we're here in Vegas, it's like, well, MGM issue, though, I don't think that justifies like an act of war. It's bad for business, you know what I mean? And it upset a lot of people who want to get in their hotel rooms, but I think it's very different than people not being able to get patient care with Change Healthcare.
Sure. Yeah. If you were going to make a bet, that's where you'd lay your money.
Yeah. I think these guys, though, as long as they continue to go and peck off individual businesses and they don't massively disrupt supply chain, I have a hard time, seeing that being terrorism. I'm not saying it shouldn't be. I just don't think that that's where it'll go, at least in the United States. I do think if they do a Change Healthcare plus or a Colonial plus type thing and could go a little bit too far, Change Healthcare is the one that's the arguable
Closest.
Yeah.
So given that, what else do you see kind of on the forefront? What's the next thing that we should be looking out for? What are you seeing with new interesting things coming to you for investment ideas?
Look, I mean, there's not a vendor out there right now that's not pitching us their AI strategy.
Sure.
All right. So again, earlier we talked about our investment thesis, and I talked about the talent gap being the first bullet word for word change from 2017 to today. Literally the second bullet from 2017 today talked about the AI, ML, or analytics in every security vendor, basically, and how it can be very disruptive if it's real. All right. So same bullet from 17.
So that's my question. Is it real?
same bullet from 17 to our seed round, our seed fund last year, and not one word change, but how we interpret it differently again. So what I would have told my LPs when we raised our fund in 17 is that AI, ML, for starters, I would say there's no AI in any security company today. Anyone calls it AI is wrong. There's ML and there's analytics, and when it's applied properly, it can be massively disruptive. Silence is a great example, how it changed the world of how we think about malware analysis, right? Back in 2014, so this is not new, right? However, we would say that less than 5% of security companies, when we peel back the onion on their AI, ML, or analytics strategy, that when you take it away, it's like 95% of the time it doesn't make any difference. It's marketing FUD, marketecture.
Yeah, and that's been a huge problem in the security industry. Right? Like, there's a lot of FUD that gets thrown around, a lot of terms, and like it seems like everybody jumps on that bandwagon. And that's one of the things I want to dive into is AI seems to be one of those things, right? I hear a lot of people talk about AI. It really turns out to be ML or LLMs, or like it's AI. AI is used as this broad overarching thing to get somebody to get interested.
Yeah, so I'd say less than 5% in 17. Today, we haven't done the math on this, but we would say it's probably about 20% of the companies actually, where it actually makes a difference, right? And that would be current, like 2024 current, right? So we quadrupled basically the efficacy, if you will, and being able to apply AI, ML, or analytics. It's not just talking about AI. I can't really differentiate between the two, to your point, So, so it's definitely making more and more of a difference. And that's really important because when it's applied in a new differentiated way, it can be massively disruptive, right? And change the way we think about things and how we think about our controls, how we think about our program, and allow you to like not focus on all this busy work and go focus on other things that you weren't able to get to previously because it can take care of it for you. I do believe that a lot of when we talk about AI, people think of generative AI and things of that nature. I do think that this is going to be a game changer for us as a society, for us in the security field. I do think it's going to happen over the next 3 to 5 years, though. Okay, so I think when we go to raise our flagship fund 3, probably in Q4 25, I don't know what I'm going to say, but I'll probably say it's 30%, 40%. Of companies right now actually are doing something interesting. Probably not 40. Probably it's in the 30s. Would be my guess. I'll probably fast forward when we're raising a fund in 2027. We're probably going to say it's 50, 60%. You know what I mean? But it's going to take time. Is my thoughts on that. But I do think that there's some game-changing things. We're already seeing that in some of our portfolio companies. Some of the things you guys are doing are really, really, they were not possible 3 years ago. Just the architecture and the concepts, they didn't exist. They were in academia still. Now they're in production, right? And we can say the same thing about a lot of our other companies too. That if you tried to start this company 6 years ago, you would have failed. It's possible today, right?
So when we think about AI as a whole, using that overarching concept, I think about the effects of AI from security from 3 different buckets that I've been using, and I want to see, I've asked other people this, I want to get your thoughts on it. I see it generally as, AI that's being implemented in security technology to help the defense, right? So a CISO is going to have something in his technology stack, and the AI is going to help him be better at his job. AI that's actually defense of the models, right? Or useful in the models, right? And then the attacker side. So do you see another bucket, right? And out of those 3, or a 4th, a 5th, if you see that, which do you think's going to be most impactful?
Well, I couldn't put the attacker side in the same buckets because attackers are using it. I mean,
No, that's what I mean though. Like the attacker, so there's the defensive side of AI, but there's also attackers are using the same technology advances to.
Yeah, I'll give you. I think security awareness is pointless these days unless you have you're using it to check a compliance box or regulatory box. At best, there's no way you can train the average user to look at a phishing email that's went through, whatever LLM you want to pick right now out of Nigeria.
Yeah, in the last 2 years, 3 years, they've gotten amazingly better.
Yeah. I mean, I almost got tripped up the other day on something. I mean, I was looking at it like, I thought I closed that Bank of America account 5 years ago, and I, for a split second, I was like, oh man, that was close,
Mine was Navy Federal Credit.
Yeah. So, it was, so anyways, it's, if I'm second guessing myself every now and then, I mean, the average user whose job isn't to think about security, there's no way you can train him to do it. So you got to rely on technology to do it. So look, I mean, at least today, a lot of the things that we're looking at right now, we're really big believers in human in the loop as opposed to thinking you're going to fully automate things. So there's a lot of ways that you can use AI, put human in the loop, make it more efficient, make it more effective, but ultimately a human's making a decision and figuring out the things to do, and AI is giving them leverage, right? So that's an example.
Yeah, I think that, for anybody who's got a car that does self-driving, like I have that, right? And I've tried to use it a couple times, and it works 99% of the time. But every now and then you're like, whoa, you got to grab the wheel and come back because there's a concern there, right? And so I think that's something that we have to think about, like just handing over the wheel and assuming that it's all going to get done.
Yep.
You and I have been a fan of saying, you can outsource the problem, but you can't outsource the risk, right? And so I think that's a thing here. Like, don't just hand it over and assume it's going to work.
100%.
Yeah.
But no, like, look, and a lot of the things that people are calling AI, like Copilot or this or that, that's not really, going to solve a lot of problems if you ask me. But look, there's a lot of experimentation happening right now. And through those experiments, some things are going to work, some things aren't going to work. I was at this kind of Silicon Valley investor founder conference like 9 months ago or so. And I was sitting in a room with it wasn't security focused, it was technology focused, but sitting in the room with like a bunch of other VCs in the Bay Area, and they were pontificating on AI. It was starting to like get really, really annoying actually almost. And kind of the senior AI Oracle guy that, finally he's like, stop, you know what I mean? He waves his hand, everyone stops. Like, listen, this guy's like, oh, he's speaking now, And he told a story that I thought was super interesting. He goes, e-commerce started in 1996. Everybody threw up a static web page, and we called it success. E-commerce was done in 96, right? And then in 2002, the world came crashing down. Or 2001, the world came crashing down. In 2002, e-commerce as we know it today started, right? So he goes, look, we're in 1996. I'm not saying it's going to take 6 years to get to 2002. I'm not saying that the world has to come crashing down to get to 2002. But we're in 96, guys. Let's not fool ourselves.
Wow. Okay.
So, and I think this is true. When we look at our CISO board of advisors in October of 22, when we first met, or we met twice a year. We met in October of 22 for a day and a half. It's like 15 Fortune 500 CISOs in a room talking about plans for next year and what worked and didn't work previous year, blah, blah, blah. If we spent 30 seconds talking about AI, it was cynical and beating up the vendors for overpromise on our delivered AI. Okay, but we probably didn't spend 30 seconds talking about it, right? Fast forward to April of 2023, same people come at 80, no one always comes to all the meetings, but let's say 80% overlap in the meeting. 100% of everyone that attended in April was either working on, talking about, or implementing a responsible use AI policy. Yeah. They didn't know that concept existed in October, right? All right, and we had 30 minutes on the agenda, and we spent 4 hours talking about it. All right, I can continue down through this process if you want, but I'll skip some of the other meetings we had, and I'll say our last meeting in April of 24 spent a day and a half, and we talked about AI 75% of the time. A lot of it wasn't like how well this is going to like have great outcomes for us. It was my CEO has implemented a set of strategy that we're going to take $1 billion of OpEx out of the business over the next 2 years. So since the beginning of the year, 200 projects have spun up that weren't planned. No one even knows anything was happening. We're going to try to take $1 billion out. We probably have $100 billion of exposure right now for things that could go wrong because this critical information is flying all over the freaking place. Half the stuff's going to fail and not work, but we're going to do it anyways. And I got to figure out how to deal with it. Yeah. And so there's that experimentation that's happening right now, and so my personal belief is you don't have like this massive AI failure like with .com bust or whatever. But I think you have micro failures that are massive, but they happen in each individual organization, and you have certain experiments that work, and then certain things are going to stick. We'll figure this out over time.
Kind of reset the stair steps.
Yeah.
Okay. So you mentioned one. You threw in the word analytics earlier in a comment, and I want to poke at that for a minute. One of the things that I think we've seen, and a lot of CISOs have been trying to figure out, is how they align more to the business. And part of that has been, I think, the security industry has done a somewhat poor job historically of delivering information to CISOs that's super technical, but not really business related and at the board. So are you seeing a change in that as your thought model changed, as we've seen this more business alignment and the elevation of the CISO, that as a security vendor is producing software, the data that they're producing, the value proposition they're producing has to be provided differently and more business aligned?
Oh, 100%. So like, you have to be able to demonstrate ROI, and make that, here's the clear benefit that you're getting. I mean, the justification, to bring a new vendor in to, get a PO done or whatever, the approval process is, as you guys know, through COVID times has just gotten to be a lot more strenuous and, taking a lot longer, and there's a lot more scrutiny, from the CFO, CEO, whatever, and big companies even, on things that they would have not otherwise generally looked at, because those thresholds and kind of approvals are just not put in place. And so, our startups needed arm, whether it's the CISO or the head of SecOps, whoever economic buyer is, whoever this is, they need to be able to arm, their customers with being able to justify these spends that before were just getting done.
Yeah, and it's not number of vulnerabilities, it's number of packets stopped.
It's definitely
it's an elevated case.
100%. And, I used to think that this was like the COVID thing, and I now just accepted this is the new norm, which is fascinating to me. I'm so happy I'm not a CISO, because it also means like, the procurement cycle is going just massively slower in so many cases. And yet I, as the CISO, am responsible for that risk while it's not being managed, because like it's taking too long to get done. I don't know how I wouldn't sleep at night, man. Like it's crazy.
Yeah, it's a challenge for a lot of our colleagues, right?
Yeah.
So, I guess as a final thing, I'd like to say, like, a lot of CISOs are also thinking about, because this role has been around now for some time, and we're seeing kind of the maturing of that CISO role, the maturing of the CISOs themselves. People are thinking like, where do I go from here, right? And you've had a great story behind your career and where you've headed and where you've gone. For someone who's thinking, maybe they're not a CISO yet even, but they're thinking like how they work on their career, how they develop, that role, how they get into, that next stage of their career, potentially into the, the investment side, as a lot of people want to do. What would you advise somebody?
Look, I mean, you didn't touch on this, but I'll go down this path. We're seeing a trend where the CISO actually has so much visibility into the IT environment, basically, that they're getting quote unquote promoted to be the CIO.
Yeah. It's almost a reversal of the roles.
Exactly. But it's real. Like, I have a friend of mine, he's a global CISO for a very large firm, had a $500,000 a year budget. And it was a decentralized program. He globally centralized it. And they go, well, now you're going to globally centralize IT. And now he has a $3.5 billion global budget. And by having both roles, he can be very fungible between security and IT, and start doing like secure by design and IT architecture and different things like that actually can streamline and take a lot of friction out of what would be a pure security control, because it's thought through the entire architecture.
I remember you and I had this conversation about my role 2 years ago, right? Yeah. And I went through the same thing, and I think you were a little bit more like, I don't know if that's going to necessarily work, but I think the thought process it seems like yours is changing a little bit, and I've heard it change from other people too.
Yeah, well, look, it had failed previously in the past, right? And I think when you had traditional IT and you had the security, I think it's different. Now, as I hate to use like industry terms, but as the four walls are eroding and, the traditional IT is not quite as obvious, so many things are more cloud oriented. The role of the traditional role of the CIO has changed a lot, actually. And I think that has changed a lot in opening up opportunities for, not every CISO has that right mentality, but for that to be success. And I can tell you today, we can point to multiple success stories in very large and also smaller organizations, not just with you, where that happened. And I think that's a trend that we're going to continue to see, personally. When it comes to the question you asked me around venture investing, like, look, I was in the right place at the right time. I, happened to, be the CISO of Blackstone and get the opportunity to invest and have senior partners kind of take me under the wing. And I got my MBA on investing over the 5 years I was there. I don't think there's like a clear, dry path to how you move from CISO land to investor land. There's a few of us now that have done it, and 2 others in my firm that have done it. But there's a lot of people who have tried it and have gotten out of it too. And there's a lot more who have tried it and gotten out of it than are.
And that's the same thing on the CISO side, right? It's kind of like almost be careful what you wish for, and like really try to understand what you're going after, and do you want that, and do your talents align with that?
But if you're interested, like the question I get more frequently is, how do I get on boards?
Yeah, that's a big topic.
And if you get on boards, then you start getting exposure to like, the investment, the business side too, and that might be a way to get, find yourself in venture land or whatever. But the best advice I give them is like, get on advisory boards, and don't do one of these advisory boards where they're just using your name as a marketing tool, but like get involved in the company ask for 3 strategic objectives that I can do this quarter, this half, this year, whatever, go and deliver on those things that really help the company, that earns that particularly if it's an early stage startup or whatever, that earns like visibility from the board, and maybe they invite you as an observer to board meetings, and you start to observe things that are going on, and you get a voice and, start getting some reps in right there. And that's the best way that you can start getting exposure, in my opinion, to like going to the next level if that's something you want to do. So.
Jay, great advice, great conversation. I appreciate you spending the time and sitting down with us. Thanks a lot for coming on the show.
Thanks
a lot.
Take care.